the next big question that I really had was like, when you're exiting, like, how do you know like when to draw those lines, like those exit lines? Let me see. Um,
That depends on where where the next zone is, essentially. So, where's my chart at? So, can you see my screen here?
yeah.
And I'll delete this for now. To my cell, and I have it fresh for now anyway. So, I don't know. Let's see. So, as an example, let's say, I guess I'll draw this one. So, I'll use the same example you said earlier, similar anyway. So let's say the market opens up, you wait at that full kind of 1 hour essentially, right? Which is going to be until 9:30 a.m. CST this point at this time, right?
Mhm.
So by then you usually say, okay, well, what's my high of the day, if at all, and then what's my low of the day? Low of the day in this case is going to be just this guy down here, which obviously hasn't been hit, or at least not yet anyway. It looks like it might fall the hell down. So this be the low of the day for the major demand zone, and then we basically need to look for, hey, what's the high of the day? After then, so it would have maybe been this, but obviously it went down, but it broke straight through it, right? So
Mhm.
it looks like it could have been a supply zone, but we need the main kind of indicator to say, hey, this is a supply zone is for one, that's the two candles to be next to each other, but
Mhm.
also two, for it to show a dramatic or somewhat dramatic push down to the downside.
Okay.
Hence, once it came up here, finally got an agreement between two candles, between the green buyers and red sellers. Then it finally dramatically pushed down. So we had our first supply zone, and I'm about to get to your question in a second, of setting it up essentially. Let's see. So that minus 10 cents. Let's get there. And of course, that's supposed to be red, but I'll just leave it there. So from a target perspective, let me get back on this. We obviously wait for it to come back up, touch it, and bounce back down. But from a target's perspective, usually, let's say, excluding all the entry criteria stuff, we're entering somewhere here because it's pushing downward. Target wise, you have to look to your left and say, okay, well, what's the closest zone where it potentially may get hit? And that'll be my target. So, as an example, the closest one where it agrees between candles is going to be like this guy here. So, just the line itself would be, say,
Mhm.
that. And then before that, what's the next closest zone? It's basically kind of this little guy all the way down here. And of course, you draw like the little 10-cent zone as well. And so if you basically bought here, it runs down. If there's no friction, you're fine with it and it continues running. That's great. You just don't have to sell it. Then you wait
Mhm.
for potentially, hey, maybe it's going to get close to this, maybe not. This is our quote unquote take profit number two. And then you just basically, once it gets close to that, it shows you a little friction that's coming back around, then you sell it. But either way, like if I go to the 1 minute chart and you look at just this spot here with the lines
Mhm.
in there, if you're buying in this spot, like on the take profit one, there was literally no friction there at all. There was like no reason for you to sell,
Yeah.
right? And you
Yeah.
can even see like this is your take profit two. It didn't get close to it, right? More than likely some frictions back here we missed, I guess. But it gave you that one green candle. More than likely, this is your first green candle. You're up so much in profit anyway. You probably just like, I might as well get out. But either way, I mean, even if you let it go for like 5 more minutes or something crazy for no reason, you were still in the green. You know what I mean?
Yeah.
Uh, but personally, I probably would have sold more than likely at the first green candle, especially
Yeah.
since it's kind of like showing the first change, if anything. Does that make sense?
Yeah, it does. So basically just like kind of like looking for like an agreement between like a red and green candle.
For the exit,
Yeah.
not necessarily. It's more of one, where's your take profit based off of where those agreements were, and
Mhm.
two, once it starts showing a little direct pullback away from taking some money back, then just go ahead and pull back out.
Okay. I got you.
It all comes down to comfort level, for the most part,
Yeah.
based off of where your stop loss is. Because remember, if we're entering on this trade, our stop loss more than likely is right here at the top. I don't know where you are in the course, but at like the top of this. So no matter what, I mean, you're in a lot of profit.
Mhm.
So obviously, you wouldn't want, and in hindsight, of course, to go the other extreme. Let's say if you can't necessarily make sure you don't get too hard headed, I guess, on where the exit is at, because this stuff is much more of an art than a science anyway. Like in this
Mhm.
example, we wanted it to get down to here based off of our zone, right? But at the same time, just because it didn't get there, the chart's literally trying to show you from a price action perspective that green, Red up here gave some action to come back down. Red and starts going back up. It's trying to tell you it's going back upward.
Mhm.
So just because it didn't touch your line doesn't mean, like, some people, I've had literally some people, they're like, well, it didn't touch the line, and then they're like, well, I sold it at a loss, like, all the way over here. And I'm like, what? How did you
Yeah.
sell all the fucking way over there? You know, so don't or basically right here at break even. But yeah, don't overthink it. You know,
Yeah. I think for me in this scenario, like regardless of whether like at that second line, I don't think even if I didn't take it at that second line, that first line, I would be out like regardless because at that point you're still making profit, but like I wouldn't hold it, up until um
all
up
the way
until
over
it goes
here.
back up. Yeah, that's one thing. Like I do like from previous trading, like when I have like the first target that I have is like the hard target. Like I know that if it's going back up, like I know that I have to get out like right now.
Yeah.
So that way I'm not giving away, all the profits. Like I might have gave, potentially some that I could have, but like I have this saying where it's like, um like could have money doesn't mean anything to me. Like I want the like actual money that
The guaranteed money. Yeah.
yeah.
Yeah, that
So
makes sense. And then plus on top of that, anyway, so I love that also. And plus on top of that, in hindsight, I mean, the candle didn't necessarily. So let's even go candle by candle as an example. So realistically, when the candles ended, they're all red,
mhm.
right? But as an example, it's like if you kept going down, the easiest one to see is like this wick here.
Yeah.
When this candle was forming, this was all green. This is probably like 15 seconds of a green candle going up. So more than likely, I mean, you could have easily gotten like, shit, maybe it is going reverse, and you probably could have sold it there anyway.
Mhm.
You know, so I definitely know where you're coming from. So yeah, I mean, shit, ain't nothing wrong with selling there. A lot of people can't even get any profit. Period. No, nothing wrong with rather sell early than sell late. You know.
Yeah.